What's going on, guys? Resilient Trading Group here, coming at you with another video. Today's video is when is it best to enter and when is best to exit when trading Forex. So let's start off with entries. Now, when is it best to enter? So here we're looking at the Canadian dollar versus the Japanese yen, and the first thing we like to do when analyzing is your support regions. So if we draw a line of support here, like so, we would know on this pair the 75.07 level is the best support line. So you'd want to get your entry along this line here. Now, if you want to get a really good entry, you'd be watching the market in the smaller time frames, breaking it down, and wait for an entry around the 74.16 level, 74.416. So the best entries is one support. So now we're on gold versus US dollar. Now the best time for you to actually enter on this pair, and this is for your entries, guys. Let's say you was looking to sell this pair. You'd obviously want to be selling it because it's in a downtrend when it hits the peak. But let's say you're in this trade and you're currently in a sell and you've got a short on the top of this trend line. When would be the best time to actually exit the trade? Now, for me, this is all dependent on your stop loss and risk management, which I'll go into another video. But as you can tell, you need to exit this trade when it's actually broken the previous resistance. So your stop loss needs to be just on this wick, and on all of these wicks over here, because this is all major resistance. If you're still in this trade once it's broke all major resistance levels, which is here, then you shouldn't be trading. Your risk management is out the window and your emotions are getting the better of you. You need to have proper risk management and proper handle of your emotions. So that's when it'd be best to exit the trade, is above the actual resistance and when it's completely broke the trend it was actually in. Now, on the flip side, when your best entry is if you was to long this pair, is what you'd want to do is firstly draw your support line, and that is along this 1613 line. So this is your support. You'd then want to draw your resistance, which is just around this 1630 line. And the best way you need to get your entries, guys, when trading for a long on gold, is you need to wait for a break of the trend. So it broke it here. You need to see a rejection of support and then a break of resistance. And then your entry would be on the break, just on the close of this wick. And you'll take profit just on the previous resistance, which would have been, you could have had a take profit there and you will have got it. Or you could have had a take profit along those wicks there and you still will have hit take profit. So that's your best entries. And your stop loss when you should be exiting this trade is just below the support. So let's say it's broke here, but it's come down to the support. You just need it a bit below the support and bit below that support region there, and you would be perfectly in a trade and still a risk to reward. Now, if you wanted to add to your best entries, Fibonacci is also very key for looking for good entries. You need to draw it from the low to the high, and then you always want your entry on the 61.8% key fib level, and that would be your line just there. Now, the 61.8% in Fibonacci's rule is that this is a golden number, so we always respect this, and you always want entry on 61.8%. So you could have actually bought it on the 61.8% line if you was looking for a long. So they're your best entries, guys, on the break of the trend, break of resistance, all your 61.8%. And now, when it's best to exit a trade, if you was in a negative trade and you was in a losing trend, is if you was to actually be in the sell, it's gone against you, and then you need to have it just above the previous resistance. Now, let's say, for example, you're in a pound yen sell and you actually took a short on this top trend line here, but you didn't know where to place your TP. You just need to actually draw it out. So as you can see, this is trading in a wedge, and what you need to do is look for key levels of support or resistance. So I can tell here that there's a key line of support and resistance here. So you could have actually took the short along this top wick here and have your take profit here, and that's when you're looking for your exit, guys. Just on the top of the trend line. You don't want it all the way below. You don't want it down here, because it's not going to break the trend. You just want to secure your pips, secure your profit, and just have it on that support. It's not broke the support, so why have it below? It's done that once. That's a clear outlier. You just need to have it a bit below bit above, apologies, the actual trend line. And that's if you're trading in a channel. You just need it above the previous support and just above the trend line, just to lock in the profit. That's when you're looking for your best exit, guys. That's where your TPs need to be. Again, this is a perfect example on the US dollar versus Canadian dollar. This was some analysis I've done on the previous video if you want to check that out. We took the entry on when it broke the wedge. It broke the support. We then took entry here and we took it to the first support line, which is here. You can clearly tell there. And you don't want to be too eager, guys. That's when you need to be looking for your entries. Once this broke all confirmations, and my take profit would now be at break even. So it's not a losing trade. I hope that does clear up a lot of things for you guys, and it helps you with your entries and take profits. If you've got any comments and questions, leave them in the comment section below. But yeah, make sure to subscribe and leave a like. Thank you for watching.